Hello everyone, welcome to another weekly market review. It is the 8th of March 2021. We've had corrections and consolidations across the board. Let's look at the key levels where we can look for upside or downside. Here's the total market cap on the weekly time frame. You see, we got that bearish engulfing, but we did not get a follow through. So we got that bounce for now. This has been very violent price action, so it kind of starts to make sense on a lower time frame, something like the 4 hour. So here you can see very steep drop. Then we got a sweep of the lows, not a stop run. Decent reaction from there, and currently we are in what you can call consolidation. Significant resistance, two significant resistance levels above for the total market cap. We have what could be potential support if price does come down to test it. So what I would say is a really confirmed scenario for upside would only be once we do break up higher. But I think flipping this big resistance would be quite bullish already for price. And I think for bears, a real victory would be if we actually lose this level. So very clean levels on the chart until these levels manifest. It can still be a range. Um, I did suggest that once we did make this correction and basically never had follow through, the dynamics have changed. What you could see for price all the way from early Jan till Feb, it was very different from what you're seeing now. And you can see, you have these strong legs up and you have these phases of consolidation. And I think a lot of people, the mistakes they make is they fail to switch their strategies. So it's something to keep in mind while understanding and while trading if you are being active in the crypto market right now. There are significant resistance levels. Should be taking profits at those and being patient. Because now it's more of a waiting game, setting alerts, you know, finding good levels to take these trades off of. Because if you're just really trying to, imagine that each of these retraces is going to lead to that bigger trend, then you might get chopped up. So just keep that in mind. Altcoin market cap going straight to the 4 hour weekly looks the same, or quite similar to the total market cap. But you can see we made slightly more progress than the total market cap because of Ethereum. Few other altcoins did pop as well, out of this consolidation. Now we have to see what happens if Bitcoin is to build some kind of a range. What happens with these coins is likely that they will correct as well, possibly not as much. I'm going to keep watching the alt BTC pairs. The thing is that if BTC is starting to range, we have to see how long it can range for. Because if BTC does start to range, likely in a bull market, alt BTC pair should start doing better. So that's something to just keep in mind as long as this range is going on. Still looking for that grand all season with correlation and upside, but until then, there's good levels and clean levels to play on both these charts. For Bitcoin as well, the levels have been clean, and this is something that was projected at the end of February. And there is more chop, but you can see essentially this is still a key resistance level which is yet to be taken out, and we have tagged already the big support, the no volume pocket right here. And what my most favorite scenario, which could still manifest yet, there is no confirmation of that, would be a sweep of this monthly open. Only and only because we just moved up without any kind of wick. Just a little unusual. It can happen. For that, I think we would have to start. I'm sorry. For that, we have to start flipping this resistance and moving up. But I would still really favor the sweep of this, and build some kind of a wick. Obviously, we would still need to take it level to level. For now, um, for now we have to see if the anchored VWAP from this move up can hold. If not, then I would still say that since this support is tested so much, it may be exhausted, and we could make this move down. This is something to beware of on Bitcoin until this big resistance level. But that too, you can see one, two, three. We've had the third test. We go for it again. You know, this has gotten weak as well. So we have this support right here. You know, 47 high 47Ks. Or yeah, it's about 47K. So this support which has weakened as well. This resistance which has weakened as well. So this has been a tight 1 week for BTC. I would say a resolution can come either above and below these key levels. The chart of DeFi against BTC, and this you can see after the big move in January, we have just been in a slightly more than a month long consolidation. Again, no confirmation for any real action you want to play. You can play the levels, sell the resistance, buy the support until either of them breaks. But it is quite clean levels again, looking for upside above this block right here, which broke market structure on the way down, and would be looking for downside on the break of this. Both have been highly tested, but they have been holding for a month. So we have to see which way this resolves, and there is no confirmation of direction until the resolution takes place. This large caps against BTC looks slightly uglier than DeFi against BTC, because DeFi really made big progress. If you talk in relative terms, we are possibly another 100% higher on the DeFi BTC index. Large caps, this is basically a quarterly resistance which has acted as resistance. We have potential V bottom that we got, but this is where it initiated from, and we have not been able to fully retrace it. So it does signify that there is still potential weakness. This is the big range low that it is failing to reclaim. It's had one, two, three, about four chances to do that. But for now, we are still unconfirmed and looking weak. Essentially, when BTC is going sideways, if the market is really, really looking up, you know, this is a ratio that should be moving up. Though, Ethereum, maybe major large cap, has been showing relative strength. So that is still a positive sign, but not completely clear signals for that big move up, but still, what I would like to see for that potential upside is really this resistance level, to flip into support. I think that would be very, very positive, and we could see some big gains in the market. The narrative is all about Bitcoin, guys. I mean, essentially, just all being pretty much level with BTC since September 2019. I mean, that itself is great considering Bitcoin is decimating almost every other asset in the world. So, as long as they are kind of holding up, that's that's good enough considering the narrative is entirely focused on Bitcoin right now. you know so that is that. Otherwise, if we are to retrace again, which is possible if Bitcoin makes its strong move or Bitcoin makes a big breakdown, either of those could lead to this. I mean, this is the level then you would really want for price to be holding. A breakdown from here would not be so positive for going back down to the 2021 yearly open. So I think the key level to hold is this daily level, and we should be looking, if price does end up coming here, should be looking to manage risk for upside from a level like this. Looking at the current driver of all asset classes, the dollar, and this looks like quite a strong move that the dollar has built out. We are within the box where the dollar should get a reaction, and if this entire move is just a short squeeze, then essentially this is the VWAP and the quarterly level that should hold as resistance. If not, and if this flips into support, then we could be looking for a further squeeze, and this could really damage all asset classes. So I would say you should be pretty careful and keep your eyes peeled out on the dollar and see if it continues to gain strength even after hitting a major resistance level. If you've been watching the reviews, you have seen this chart before, and it is the seasonality chart, and you can see February and March are living up to their name, having downside and chop. So it's something that we were looking at since, I would say, the last 3 to 4 months, and it is something that currently it looks like is manifesting. But what I would say is that if this is so, and seasonality and the seasonality clock is manifesting, then tech is the place to look at, because we get generally the maximum returns in technology after March. So you look at those tech ETFs, I would say, if this is the seasonality and it is something that ends up manifesting. Here's a significant analytic, which shows the actual money flow, which has happened in bonds and equities over the last 10 years, 10 to 12 years. And what you can see is that equities, the exposure has been significantly reduced over the last 3 years, while price has been grinding and threatening and been moving up. And just look at the exposure in bonds, so you just think about where the actual money is, where the masses are, and think about where the actual bubble could be lying, so it could be in bonds. It is potentially possible if you look at where the actual big money crowded trade is. There's something to keep in mind, and something I think is always hidden from retail. How money flow is taking place, because we get so caught up in the day-to-day narrative. Sometimes you just need to zoom out and look at significant statistics that can help to define what the potential current scenario could be. We're looking at commodities, and I have been shilling commodities to you since potentially all of last year. We got some great entries on copper and platinum. And you can see currently what we have drawn out. This is basically the year-to-date total returns for the S&P GSCI index. And we are currently right up there in terms of the yearly returns. I think there's probably only just once or twice before that we've had a slower, a faster start than what we have right now. And of course, this is the asset repricing happening because of the dollar. But 2003 was the last time, so this is actually just the second strongest start. And this is after gold has been tanking. This is after silver has been giving a mediocre return. So you do know, if you've been watching the reviews. If you haven't, just go back the last couple of reviews. You can see I have just shown you and charted all the commodities, and you can see how strongly they are outperforming the dollar right now. And essentially, in terms of relative strength, how strongly they are outperforming each other. So there are some very strong trends in there, and something worthy of looking at.
If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!